In this presentation, we're going to create a purchase order in our accounting software. Let's zoom into it with Xero. Here we are in our Get Great Guitars file within Xero. We're going to be creating a purchase order. Before we do so, let's kind of consider what a purchase order is. Let's just give a review of what the purchase order is. To do that, I'm going to go into the desktop version for QuickBooks just to look at this flow chart because that shows us kind of the flow of the purchase order up top. So we're in the vendor section when we're considering purchase orders. We typically only use purchase orders if we're going to be selling inventory, and even then we may not use the purchase orders all the time. So remember what's happening is we're going to be buying, say, inventory that we expect to sell later. Now, when we buy the inventory, if you're going to buy something like on Amazon or some type of online retailer, typically if you're an individual or possibly even a business, you may purchase the inventory or pay for it with a credit card or something like that, PayPal, some kind of payment at the point in time that you buy the inventory, even though you have not yet received it. That's how a purchase typically works when we order something as a consumer. So at that point, then you might say that there would definitely be a financial transaction because you spent money even though you haven't got the inventory yet. However, if you were to purchase something, say from a large purchase, say we're ordering our guitars or like guitar stands or something from China, and we're ordering a bunch of them, it may be the case that we can request the order and then not have to pay for it until we receive them. And that's kind of what you want to think of with the purchase order. So if you're making a purchase order, then you're thinking, hey, this is a request that I am making. And the unique thing about this transaction with just about any other thing on here, I think it's unique. There's no other thing on here, I believe, that does not have a financial transaction. Every other form here has some type of financial transaction related to it. Purchase order has numbers on it. It looks like it would have a financial transaction related to it, but not really, because it's just a request, because we haven't yet received the inventory and we have not yet paid for the inventory. We're just requesting the inventory at these terms, at these prices, which we will then link to. We can imagine then our guitar stand things coming into our warehouse, and then we would basically count them. And at that point, then we would take the purchase order data, use it possibly to help us populate the bill that we would then put in place, which would record the inventory on the books at the point in time that we receive it, and then we would record the payable that we would then owe the liability going up at that time. So that's kind of what's happening. We're doing just a request, no effect on the financial statement. So keep that in mind. Unusual thing, used to confuse me a lot. Purchase order looks like there should be an effect on the financial statement, but no, none. All right, so then we're going to go to the plus button up top, and we're going to go down to the purchase order. We're imagining we're requesting like a guitar now from our vendor. We're not paying for it yet. We're just giving a request. And so we're then going to say the contact is going to be our major vendor now for our contact, which is Epiphone. So I'm just going to type in Epiphone here. There it is. Epiphone then populates. And we're going to say that this happens on the 12th. So I'm going to bring this to January 12th. Like so, like that, like so. And then I'm going to go down and say that we can populate an item, and we do want to buy an item because this is an inventory item we're doing on the purchasing side of things at this point. So the item we want. So we want the Epiphone Les Paul, which I think is an ELP. That's one of our more popular ones. We keep that in our shop and sell quite a few of those. We're going to say the description is going to be an Epiphone Les Paul. We're going to get one of them. We're buying one of them. The cost is $400. How did the form know how to populate that $400? Because it picked that up from the product and service items that we had set up. That's not the sales price. That's not what we're going to sell it for. That's what we're asking to purchase it for. We're not going to have any discount here. We're going to say the other side is going to be going to inventory. And again, that has been populated for us given the fact that we have set up the items in order to do so. Notice everything populates for us in essence pretty automatically here. Now, the scenario we are imagining is that when we sold this Epiphone, someone came into our store, and a customer comes into our store, we're going to call it Eric Music, and said, hey, I'd like this Epiphone Les Paul. And we're going to say, hey, we got a few of those Les Paul Epiphones here. And they're going, yeah, but I don't like the color. I want a green one. I want like a different kind of band on it or something. And we're saying, okay, now we're going to do a purchase order for you. We'll get the guitar, and then we'll provide it to you. So now we're imagining we're going to go to Epiphone and say, hey, we need this guitar. We need like this green one or whatever with a band on it. And then they're going to send it to us. And when we get it, then we'll turn around and give it to the customer who purchased it. And we'll set up then the invoice at that time. So this is the cycle we have. We have someone requesting a guitar. We don't have it in the shop. We went to our vendor to buy it. We have a purchase order, we haven't yet paid for it. They're going to ship it to us, we're going to receive it. Then we're going to have a bill, and we're going to pay the bill and record the inventory at the point in time we receive it. Then we're going to go to the sales cycle side of things, and we're going to say now we're going to create the invoice related to it, and then ship it out to the customer, recording the sales side of things and the related cost of goods sold. That's going to be the life of the cycle that we will go through. We're in the purchasing cycle right now. We'll take the same guitar and go through basically the sales cycle for it. And we're gonna go on down and say approve. We're gonna approve the purchase order, and the purchase order is now approved. We could send the purchase order. We could send it by email if we so choose. If we have the email set up to send it out through this format, you can go to send, and it'll give you kind of your default sending options related to it. I'm not going to send it out here in the mock example. Going to go back up top, and we're going to then go to the dashboard. Remember, no effect on the financial statements. We're not going to go to the financial statements. What we can do down here is go down here to the bills you need to pay. Now, we haven't entered a bill, but we're going into that section because that's kind of tracking a bill that we expect to have pretty soon when we get the goods, the guitar. So we're not going to go to the bills time up top. We're going to the purchase orders down below because we expect to receive the purchase order. We have over here the $400 purchase order that has been approved, and then you could go down and you could take a look at that purchase order.